This is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 2nd, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. I got some feedback last week, and I'm going to try to minimize the advertising. So, you know my website, MasterChartsTrading.com. I'm not going to mention it again until the very end. I will show you that I'm going to use certain indicators which are called Master Charts Trading price action indicators because I was the one who designed them. So having said that, let's get right into the video. So not really much was happening this week. Kind of unremarkable week for both stocks, bonds. Actually, vast majority of asset classes really barely moved. So we'll look at that. We'll look at Nasdaq. We'll look at small caps. Solar, it's just a nice trade, almost 100% up. The only thing that I'm kind of very excited about, I think, is the utilities. So I'll show you that chart as well. Junk debt, Treasuries, not much is happening. Oil looks really cool. I'll show you on the 4-hour charts how to trade various continuous instruments with my indicators. And also we'll look at gold, silver, and it could be a buying opportunity. And finally, we'll finish off with Ethereum. So very briefly again, I will mention what these lines are. This green, blue, red, and yellow line on this chart. They are my indicators. They're called Master Charts Trading price action indicators, and I use them pretty much exclusively for trading. So what do they show? They show what's called a support and resistance. So on this chart, this is S&P 500 futures. You can see clear breakout here. I'm going to zoom out a little bit. So we had a low on the 23rd of March. Then we just had a big rally, and finally, what in my opinion was a breakout. So the breakout occurred on 29th of April. And since then, the S&P 500 has rejoined the bull market. This is all really I need to know. I need to know whether or not the security has closed above the blue line for it to be considered in an uptrend. So once it's in an uptrend, once it closes above the blue line, I will consider it in an uptrend. These indicators show, they're mathematically calculated, and they basically show support and resistance. At support and resistance, buyers and sellers will fight. And whoever wins, this is whom I want to be with. So in this case, on 29th of April, the bulls won. And I immediately joined the bulls, and I abandoned any of my bearish thoughts. So bearish thoughts were still back here in March, but then they disappeared. And from now on, I'm pretty bullish. From then on, I was pretty bullish. I was buying various stocks. I was telling my subscribers to keep looking for buying opportunities, and we were buying them together. So right this instant, not really much is happening. You can see that the stock, S&P basically was trading around the green line since 4th of September. So what does this mean? This just means this is a weak support. So we had an all-time high and a pullback towards first support. So, and it's weak in a sense of I don't normally think of green line or the yellow line if I'm bearish as support. It's more of a target. So if you're trading on the upside, then a green line is a wonderful target and also a good place to take profits. Now the blue line is the important one. This is where I'm looking for opportunity to buy if I'm bullish, or if I'm bearish, I'm going to look for opportunities to short around the red line for continuous instruments. If you're trading stocks and you want to short them, it's a little bit different procedure. The stock needs to drop below the yellow and then bounce towards the red. So that's a sweet setup. Actually, in fact, I'm going to show it one, not Chevron, but ExxonMobil. I think I already showed it last week, but this is how it works. Basically, we have S&P. A stock was below the yellow, definitely in a downtrend, bearish, and then it bounced towards the red line, kind of made a high above it, whatever, and then closed below it. So this is what the important thing is right there on the 11th of June. If I was shorting ExxonMobil, this was what I would have done. I would have shorted it on the 11th of June, and maybe a couple of days later. There's a couple of more opportunities because the price really didn't really go far. And this would have been 30% gain. Now, we don't really care to short because right now we're in an uptrend, so there's no need to look for selling opportunities. There's literally hundreds of buying opportunities, and it would make much more sense to be buying during the bull market, such as right now. You want to have the market on your side, so it will help you if you're buying. If you're shorting, then you want the market on your side as well, but the market is not right now. The market is an uptrend. So we're gonna keep looking for buying opportunities. Right this instant, I'm not very excited about this chart because I don't really want to buy it. I want to be buying it only around the blue line, which is at 3057. We may or may not get there, or we can just make a new record. It's entirely possible. Nasdaq. So QQQ, this was just a monster move. Opportunity to buy was way back in April. That resulted in, you can see a nice gain, 44% gain, and this was back in April. Since then, really no opportunities really. So right this instant, we're, here in August, I was just warning my subscribers that this is completely unsustainable. This move from August 12th till September 2nd. So yes, it's sustainable, and we're seeing a pullback. Ideally, we should see a deeper pullback towards around 251 or this blue line. You can see it's just strong support there. So another 8% down, and we will be at an excellent buying opportunity. Right this instant, I'm just like, whatever. I'm not really interested in this particular chart. But in general, it's in an uptrend, so we do not want to be thinking about selling and shorting. We only want to be thinking about finding a good opportunity to get in on a trend to buy, to go to the upside. So small caps, they were underperforming. They're still underperforming the general market, but overall, they're doing the same thing in regards to the support and resistance lines. You can clearly see it here. So up arrows here, opportunities to buy, actual alerts to my subscribers. Latest alert actually was successful. This is enough to make money. If you buy at 144 and you sell at 153, that's already a sweet 6.5% move. And if you trade options, usually options are like at least 3 times. So you can think of leverage. The way the options provide leverage is about 3 times at least. And I'm talking about the longer term options. If you have a shorter term options, they move even more. So in this case, you could have made easily close to 20%. Just buy right there on the 24th of September, and you can already sell it right now. So it moved 6%, but like I said, usually it's about at least 3 times for the options. So we're looking at about 18 to 20% move in such a short period of time. So I've been trading options lately quite a bit, and I absolutely love it because with stocks, you need a huge capital. There is more risk. There is more psychology of trading involved. With options, you just buy only the amount you're okay losing. So let's think that you bought, let's say your account is 100,000 and you bought $1,000 worth of options. With me so far? So right there on 24th September, you would have bought $1,000 worth of options. Now your stop is way down below here at the yellow line. So I guarantee you by the time it gets to this yellow line, it will be zero. It will be worthless. So that's the ease of another plus for the options is that you don't have to think, how many shares do I need to buy? If I exit at the yellow line, how many shares I need to buy? And then many people, what they do is they buy, correct amount of shares. So let me just give you an example. So I'm going to choose long position here, long position. If you click on the settings, you can change this account size to, let's say, 100,000. And I'm risking 1%. So in other words, if I'm wrong, I will lose $1,000. So let's pretend we bought it here on the 24th of September. And we put our stop way down there at the yellow line. So this is what I normally do. Now, here's your target. It's basically been reached already. There's your target. At this point, what I do is I advance my stop. And then this way I cannot lose. But with options, it's a little bit different. So, like I just showed you, we're going to buy, let's say here on 24th September, we're going to put our stop at the yellow line. We're going to buy $1,000 worth of options. So however many options that would be. And if they expire worthless, we will lose $1,000. But if you actually did this, with the regular stock, not the options, and for example, your stock continued to fall, and broke below the yellow line, and you're like, I should exit, but I don't feel good, or I feel bad, or I don't want to show this, whatever, I want to suppress that, and then people don't. And then what happens is it continues lower and you lose more than $1,000. So the beauty of options is that you can't lose more than you bought. So this is why I'm liking more and more options. So that you just buy however many options you're okay with completely letting go of, and that's your account. That's your position. You cannot lose more than 100%, but you can definitely gain more than 100%. I mean, this is already like over 20% move for the option. Just a little bit higher, it could be 100% move easily, and even more. So here's another just beautiful example, very clear, and you can see it's Zenlike. You really cannot miss it. If you have the indicators on your chart, and they're really easy to do, I can share them with you. Right there's the 1st of June, there's the breakout. It's obvious, we have a close above the blue line, so you cannot miss it right there. And then we just buy. We buy there, we sell out, set our stop at the yellow line. Once our target is reached, we advance the stop to the blue line, and trail higher, higher, and higher. In this case, it was just a blockbuster trade. I still would have kept most of this position open. I may have taken some profits right there on the 4th of September, but vast majority of position could have been still open. Think about if you bought an option here and it went up 100%, the stock went up 100%, we're looking at 300 to 500% gain at the very least if you trade in options. Excuse me. So congratulations if you opened. Okay, so another interesting pattern I wanted to share today is the utilities. So this blue arrow and this blue arrow were actual alerts. I still have the position sizing tool here, so we're still waiting for the resolution. But look how very interesting. It just goes from blue to red, and this pattern, it's quite bullish, surprisingly. So this depth of pattern, to here probably it's at least 12%. We're looking at, if we see a breakout, we're looking at least 12% move to the upside. So it's going to put us within a striking distance of new all-time records for utilities. And I particularly wanted to see utilities finally start moving higher because, even though these are considered like a defensive sector, surprisingly, they are quite important. And just, from my observations, I noticed that utilities should participate in the market advance. And of late, it's been kind of just doing not much, just been trading sideways. So I'm really hoping that this is the charm. This time is the charm. And if we break out again, above the blue line, we already had the closes above the blue line, so all we need to do is just move. We're set up. We have positions, long positions. We bought this. In fact, I think I might want to buy some myself in a different account as well. This just looks very promising. So if utilities, continue to go higher, this would be extremely positive for the overall general stock market, because some people, just from a fundamental point of view, can look at it and say, okay, so demand for utilities are increasing, so that means there is, good things happening in the economy. But I really don't really care about fundamentals, like not at all. So I prefer to just simply look at the chart, and the chart currently is telling me to just buy it. So I'm thinking maybe I'll buy some, leap options, so options that are expiring at least 1 year from now. And I like longer term options, because see how long it's taken sometimes. So if you held an option here from April, till October, it would have been losing its value in price. But if the option is way out there, like a year ahead or a year and a half ahead, then it doesn't lose as much, price the people will pay for it. It's called theta, Theta, theta decay. So you can look it up for options. But yes, looks very promising. I'm actually kind of salivating to buy this thing right now. Unfortunately, it's Friday. Okay, so junk bonds. So junk bonds, kind of interesting, similar to the way utilities broke out. Several touches. I actually bought into my retirement accounts. I sold half of my position because it's dropping, and I will probably close my position if it goes towards the 101 level, because I definitely don't want to have a losing position, or losing trade rather. It's actually very important for your sanity if you want to survive in this business of trading, and you want to succeed in this business of trading without going completely bonkers. Is you have to kind of remember that the psychology of trading is important. You have three different things, in my opinion, that are quite important. So you have, number one, system. Do you have a system? When are you gonna buy? When are you gonna sell? Do you have some kind of a parameter? So in this case, yes, you have a system. You buy and close above the blue, put the stop and close below the yellow for stocks, and then just once the target is reached, we're gonna advance our stop to entry and trail higher. I also take profits every so often, usually around the green line. So that's my system. The second one is risk control, and I already explained risk control. So actually, using options is quite easy and easier than calculating position, because if you're buying, how many shares are you buying? You're buying a number of shares where you're going to be okay losing, some percent of your account. I usually recommend 1% of my account, especially for beginners. So this is what I have: 1% of, in this case, account size is sample 100,000. So if you are wrong and the stock continues lower, you will lose $1,000. Like I said, with options, it's a lot easier. So that's number two. You got two things. You got the system. When are you going to buy? When are you going to sell? When are you going to advance the stop? When are you going to take profits? You got the risk control. How many shares are you going to be buying, so that you don't go broke if you are wrong? And you're going to be wrong at least 30% of the time, maybe a little bit less. But vast majority of people are actually wrong more than 30% of the time. I happen to be able to cut my losses and make the transactions at least break even in about 70% of the time. And vast majority of the time I still make some money. My profit factor, in other words, how many dollars I make to over how many dollars I lose, is about 3. So I win $3 for each dollar I lose. And this is a quite an acceptable profit factor. And finally, what is the psychology of trading? So psychology of trading is when you get to the stop, are you actually going to exit? Are you going to just go completely, crazy and go from the fluctuations in the market? Is your position that huge that you're not being able to sleep? So maybe you should reduce your position. So psychology is very important. You got 3 different things that are super important for trading. That is psychology, risk control, and system. Find out more if you need help. You can send me a message. I also have messages here on TradingView, but you can send me a message at my site. Okay, so treasuries. Treasuries are more of a defensive, I guess, security, and treasuries, especially the long-dated ones. So right now, not much is happening. It's been basically trading sideways since August. I opened the position myself here on September 10th. So far, not much is happening again. I'm just sitting in the position. The target wasn't reached, and the stop wasn't reached. So I am just sitting there and collecting dividends because treasuries pay dividends. So another positive thing, that goes for stocks versus the options. At least you get the dividends. And if you are psychologically strong enough, you should have no problem trading stocks. If you are psychologically a little bit weak and have problems admitting mistakes, it's a big problem. People hate it. People hate, showing their weakness. People hate showing that they made a mistake. Trust me, in trading, it makes very little difference. You just need to admit. If you don't admit that you made a mistake, you will be even worse. You will be more wrong, and you will lose more money. You need to cut your losses. That's the important thing. Let the winners ride. Cut your losses. So anyways, in this case, Treasury is just doing nothing. My stop is still at the yellow line. I'm waiting for a move higher so then I can advance my stop. Right now, nothing is happening. Okay, interesting, I think, pattern is oil. So this is oil on the daily chart. Notice that back in April, the price was minus 40. It's weird, but nevertheless, it's tradable. On daily charts, there's not much happening. I mean, yeah, you could have bought it right there on the 12th of May, and you would have made good money. This is about... excuse me. 58% move. So yeah, you would have made good money if you bought it right there on breakout on 12th of May. And this is on daily charts. So you can trade it on daily charts. Not ideal. There are people who trade contracts for difference, US oil. So this one looks a little bit different. But we want to stick to, we want to stick to oil futures. I want to show you oil futures, but I want to show you oil futures on the 4-hour chart. So yes, you can trade continuous instruments. So if people sometimes don't understand what continuous means, continuous instruments are like this. This is a 4-hour chart, and you can see there are no breaks in there. But if I, for example, put in S&P 500 SPY, so this 4-hour charts, there are breaks there, so there are gaps. So those opening gaps, this is why I do not use my indicators for trading stocks intraday. This is a stock, S&P 500. This is an intraday chart, 4 hours. So if you want to trade intraday, go to continuous instrument, such as oil futures. So on this chart, it's kind of interesting to see. We can see a failed, maybe a possibly break-even, trade So for example, I'll be buying it like right there, but I'm not sure if the target was reached. And in any case, you probably got stopped out, and you probably got, this is probably a losing trade. But these trades here is a winning trade, because your stop when you're trading intraday this is a short stop. So let's say you're shorting it. So how would you short it? So you can buy puts on USO. Not ideal. You can if you have futures account, you can short it outright. So if I had a futures account, I could have done that. I could have shorted it maybe there as well. But my stop would have been at the blue line, above the blue line. And let's say I shorted here on 29th of September, I would have not been stopped out because my stop is at the blue line. But you can see that this is a successful trade. So if you opened it, that's a 5% gain. And for futures, this is a very large gain. So this is the way to trade on my using my indicators on the intraday charts. You can do any, you can do 5 minutes chart. It doesn't matter. It's the same principle. So if it's below the yellow line, we come up to the red line, we short and close below the red line. If it's a bullish security, we can do the opposite, and for example, there, keep buying on breakout above the blue line. And look at this nice move. You see how nice of a move that is? And again, I keep saying the same thing. It's clear. You cannot miss it. There's the breakout. You would have seen it on your chart at the time. So you can see that the indicators are not drawn in. They are mathematically calculated. So you can see very nice opportunities here. Continuous security, again, to trade intraday. You cannot trade this S&P, for example, or like Apple stocks. You cannot trade intraday using my indicators. And I actually would not recommend it in general. People normally lose money when they trade, day trade. Okay, so dollar index. Here's dollar DXY. This is a daily chart again. So yellow line is, so this you can see it's in a downtrend. There's no question about it, right? For securities such as Forex, we use the red line as the line in the sand, and you can see a breakdown. So this breakdown is tradable if you can trade DXY. Now the yellow line, I personally don't like it because it feels like not enough. So if the trend is down, we need to see a substantial move in the opposite direction, and then we're gonna sell it, short it. So ideally, I would have liked to see a move towards the red line, but it never occurred. So right now we're at this weak support, and the lows are not that far off. This is the lows here on the 1st of September. So what I'm thinking is, this support may not hold and we could just collapse to new lows. However, if we look on the 4-hour charts, the picture is substantially different, and it's actually quite interesting. Because once again, yes, you can trade it intraday. So there's the initial breakout at 7 o'clock in the morning on September 21st, and you have a nice move immediately. Now we're pulling back, to the support. So this blue line is acting as support currently. You can see an arrow there as well. Let's see if it holds. If it holds, then we could see a slight, move higher and possibly another high for the move. But looking at the daily chart, it just feels like it's about to make a new low. So I'm not sure on a 4-hour chart it will hold. And of course, if the dollar is losing its ground, then silver and gold should benefit. So this is gold, almost came down to the blue line. Ideally, it should touch it. I have a feeling it might still. Beautiful move to all-time record highs. But after such a huge move, you can see it moved like 30% from the latest alert on the 23rd of March. A move back towards the blue line would be ideal. We can touch the blue line, close above it, and then we can start buying. Right now, I'm not. Yeah, I'm gonna just wait and see what happens. For silver actually made a new low below the blue line. I went ahead and I bought it right there. Actually, I have a position in silver on 24th of September. I bought some silver. Don't know. I mean, it could still come down. It will just depend on the dollar, like I just showed the DXY. So if this yellow line doesn't hold, we can easily see new highs for gold and silver. But just looking at this 4-hour chart of the dollar, it's still in the uptrend on the 4-hour chart. So if I was trading it on 4-hour chart and knew nothing else, I would be buying it right there. So with gold and silver, I have a position in SLV silver. I bought right there, but right now it's slightly winning. I need to see a move towards like $23.90, $24, and then I can advance my stop. Right now I'm just waiting and seeing. Finally, Ethereum. So Ethereum, I also bought Ethereum a few days ago on 24th of September. Right this instant, beautiful opportunity. Touched the blue line yet again right there. So it touched the blue line and now it closed above the blue line. This is my trigger to be buying it. So let's wait and see what happens. But it looks bullish, like it looks like it wants to go higher. And you can buy major cryptos now on even big exchanges like Robinhood and things. And Robinhood, for example, has crypto. You can buy cryptos. You cannot sell them. You cannot short it. You cannot have options on them, but you can at least buy them. So that's what I did. All right, so that's it for this week's recap. Like I promised, I didn't really do much advertising throughout the presentation. So head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. You'll go to the same place. And look for products. So we have 3 different products. We have a newsletter, trading indicators, and the ultimate package. Ultimate package, everything is included at a great price of $50. Trading indicators, so you get price action trading indicators that I was just showing you. These trading indicators. So for example, here's my old trade for NEO. Again, no-brainer trade. Right there is the breakout, 27th of May. I just sit there afterwards. Made a huge amount of money because this was an options trade. So these are alerts for the newsletter. So this type of thing you will get. Trading indicators. These are the lines. So green, blue, red, and yellow line. You will have them on your chart for TradingView.com. And you do not need a paid TradingView.com account. You can just get a free one. This is TradingView interface. TradingView.com right there. You can open a free TradingView account, sign up on my site, and then get the indicators. So you get all of these alerts, various securities we trade, like Apple, whatever, Facebook, ETFs, and I also send weekly in-depth discussion, and we have an internal blog as well. Now, for the ultimate package, I now moved the speculative stocks into this section. Also, the commodities, gold, forex, they're going to be in this more of a ultimate section because not everybody trades them, and they're a little bit tougher to trade. And I think that one of the better one, another product we have here is Stock Screener. So you can actually screen for breakouts of such, close above the blue line, for example. And there are many opportunities like this in the stock market universe every day. So not a rare event. I have so many positions. I have like close to 20 positions, and the reason being is because I have there's so many opportunities, and I wanted to buy a variety of stocks. But some people like it to open bigger positions with fewer stocks. I prefer to open more positions with a smaller amount each position. So overall, probably the same thing, but I just prefer it this way. It's really up to the trader. All right, that's it for this week's recap. If you have any questions, please let me know. Thanks for watching. Have another great trading week. Bye-bye.